What if I told you the hardest part of crypto isn't buying? It's not finding the next 100x altcoin. It's not timing the bottom. It's getting out. What is the crypto exit strategy nobody teaches? And why do 90% of people who win in crypto end up giving it all back? 2026 is not 2021. It's not the easy money stimulus era. It's not the NFT mania phase. Liquidity moves differently now. Institutions play differently. Retail behaves differently. And if you don't understand the exit, you will ride the next wave up and then ride it all the way back down. Let's break this down, because this is the crypto exit strategy nobody teaches. 1. The lie you've been sold about taking profits. Most people think an exit strategy means one thing: sell the top. Sounds simple. Buy low, sell high. That's the dream. But here's the reality. You don't know where the top is. Nobody does. Not the influencers, not the macro analysts, not even the whales. Look back at every cycle. In 2017, people thought $5,000 Bitcoin was insane. Then 10,000 hit, then 20,000, and nobody sold at $19,800 because they were waiting for 25,000. In 2021, the same thing happened. When Bitcoin hit 60K, people said 100K was guaranteed. When it hit 69K, they were sure 150K was next. Then it dropped. And it didn't just drop, it collapsed. So here's the first truth. Your exit strategy is not about predicting the top. It's about protecting your psychology. Crypto markets are built on human emotion: greed, fear, euphoria, denial. When you see your portfolio up 300%, your brain changes. You stop thinking logically. You start calculating what it'll look like at 600%. That's the trap. The exit strategy nobody teaches is this: you sell into strength, not weakness. You don't wait for panic. You scale out during euphoria, because by the time fear hits Twitter, it's already too late. 2. The 2026 liquidity reality check. Let's talk facts. Crypto doesn't move in isolation. It moves with liquidity, global money supply, interest rates, risk appetite. In 2020-2021, central banks printed aggressively. That money flowed into stocks, into tech, into Bitcoin, into altcoins, into meme coins. That wave lifted everything. But 2026 is different. Interest rate cycles are tighter, governments are more cautious, regulation is more defined, and institutions now dominate volume in Bitcoin ETFs and large-cap crypto. That changes the game. Retail doesn't control the exits anymore. Institutions do. When big funds rebalance, when ETFs see outflows, when macro shifts, it happens fast. And if your exit strategy is, "I'll just watch the charts," you're already behind. Here's what smart money does. They define exit levels before they enter. They calculate risk-reward. They pre-decide sell zones, not emotional sells, pre-planned sells. Let me ask you something. If Bitcoin goes to 120K, what percentage will you sell? If it goes to 150K, what percentage? If it drops 30% in a week, what's your move? If you don't have answers right now, you don't have an exit strategy. You have hope. 3. The altcoin illusion. Now let's talk about the real danger: altcoins. This is where most retail investors lose everything, because altcoins don't behave like Bitcoin. They behave like leverage. In bull markets, they explode. 10x, 20x, 50x. But when the music stops, they drop 70%, 80%, 90%. Some never recover. Look at history. Go back to previous cycles. The top 20 coins of one cycle rarely remain dominant in the next. Blockchain technology evolves. Narratives shift. DeFi becomes AI. AI becomes RWA. RWA becomes something else. And retail chases the story. The exit strategy nobody teaches for altcoins is brutal but simple. Assume it will eventually go down 80%, because most do. So when you're up 5x, 10x, 15x, you don't ask, what if it doubles again? You ask, what if this is the only window I get? Professional traders scale out in layers: 25% at 3x, 25% at 5x, 25% at 8x. Let the rest ride. This way, even if it collapses, you've already secured profit, you've removed risk, you've paid yourself. Because here's the uncomfortable truth. Unrealized gains are not wealth. They're numbers on a screen. We've all been there. You screenshot the portfolio, you calculate what it would be if it doubles, you imagine quitting your job, then 2 months later, you're back where you started. That cycle destroys more people than bear markets. 4. The psychological exit. Let's get deeper, because the real battle isn't technical, it's emotional. Why do people fail to exit? Because exiting feels like admitting it's over. It feels like leaving the party early. What if it keeps going? What if I sell and it doubles? That fear is powerful. It's called opportunity loss, and it hurts more than actual loss. You'll forget a 40% crash faster than you'll forget selling too early. So you hold, and then you freeze. The exit strategy nobody teaches is this. You detach your identity from your portfolio. You are not your crypto balance. Your self-worth is not your unrealized gains. In 2026, crypto culture still glorifies diamond hands, but diamond hands without a plan is just stubbornness. Even long-term believers in Bitcoin rotate capital. They rebalance. They diversify into real-world assets. They move profits into stable positions, not because they lost faith, but because they understand cycles. Let me ask you something personal. If your portfolio doubled tomorrow, would your lifestyle change? Would you actually move some into cash, pay off debt, invest in something outside crypto, or would you just reinvest into the next altcoin? That answer reveals everything. 5. The 4-step exit framework, the one nobody talks about. Here's the practical part. No hype, no fantasy, just structure. Step 1. Define your why. Why are you in crypto? Freedom? Wealth? Early retirement? If your goal is financial security, then holding through a full cycle collapse makes no sense. If your goal is long-term Bitcoin accumulation, your exit strategy looks different. Clarity changes behavior. Step 2. Set tiered sell zones before price reaches them. Write them down. Example, at 2x, sell 20%. At 3x, sell 20%. At 5x, sell 20%. Keep the rest. For Bitcoin, maybe you sell smaller portions. For high-risk altcoins, sell aggressively. Structure removes emotion. Step 3. Convert gains intentionally. What are you converting into? Stablecoins? Fiat? Real estate? Stocks? Business investment? If profit just sits idle on an exchange, you haven't really exited risk. True exit means shifting into lower volatility assets. Step 4. Prepare for re-entry. Yes, exit strategy includes re-entry. Cycles repeat. After euphoria comes correction. After correction comes opportunity. The biggest wealth transfers happen when people who exited calmly re-enter when others are afraid. That's the cycle. That's the game. 6. Why 2026 is different. We're entering a more mature crypto market. Bitcoin ETFs exist. Institutional custody is normal. Governments hold digital assets. Regulation is clearer. This reduces chaos, but it also reduces explosive inefficiencies. Altcoin cycles might be shorter. Liquidity rotations might be faster. Narratives might burn out quicker, so exits must be sharper. You can't rely on 2017 playbooks. You can't rely on 2021 playbooks. The game evolves, and so must you. 7. The brutal math of giving it all back. Let's do simple math. If you turn $10,000 into $100,000, that's a 10x. If it drops 80%, you're back to $20,000. Still up, but emotionally, it feels like losing $80,000. And most people hold through that drop because they anchor to the peak. They don't think I'm up 2x, they think I lost $80,000. That pain often pushes them to sell at the bottom, so they ride the wave up, ride it all the way back down, and exit when fear dominates. The exit strategy nobody teaches prevents that. You never experience the full 80% collapse because you scaled out, you secured gains, you reduced risk, you controlled risk. 8. The truth about never selling Bitcoin. You've heard it, never sell your Bitcoin. There's truth there. Bitcoin is scarce, it's decentralized, it's digital property, but even Bitcoin maximalists rebalance. They borrow against it, they allocate percentages, they don't put 100% of net worth into one volatile asset. The mature strategy in 2026 isn't blind holding, it's intelligent allocation. Maybe Bitcoin is your core, maybe Ethereum supports it, maybe altcoins are satellite bets, but exits happen at the satellite level first. High-risk exits first. Core holdings adjusted strategically, not emotionally. 10. What the 0.1% do differently. Here's what most people never see. High-level investors don't chase exits. They design them. They ask, what outcome guarantees I win? Instead of, how do I maximize every dollar? Winning might mean turning 50K into 120K, then moving 100K into stable assets, letting 100K ride. Now you can't lose original capital. That changes your mindset completely. You're no longer desperate. You're strategic. Calm money makes better decisions. 10. The final reality check. Crypto will pump again. There will be headlines. There will be predictions of $250,000 Bitcoin, $20,000 Ethereum, 100x altcoins. There will be influencers screaming. There will be charts going vertical. And in that moment, you will feel invincible. That's when your exit strategy matters most, not during crashes, during euphoria. Because exits don't happen in panic, they happen in strength. So here's the lesson. If you don't define your exit, the market will define it for you, usually at the worst possible time. Write it down. Percentages, targets, conversion plans, re-entry zones. Decide now, while you're calm, not when your portfolio is exploding or collapsing. Crypto isn't just about buying early, it's about leaving wisely. If this opened your eyes even a little, you already know what to do. Stay sharp, stay structured, and remember, in 2026, the real flex isn't catching the top, it's keeping the profit. Don't forget to like, comment, share, and subscribe for more insights. Disclaimer: by watching this channel, you acknowledge that you understand the risks associated with cryptocurrency trading and investing, and you are solely responsible for your own trading decisions.